right, happy Sunday, everybody. It is May 8th, 2022. It's about 9:01 p.m. Eastern Standard Time on this Mother's Day. So before we start the stream, I just want to say happy Mother's Day to everybody. Hope you enjoyed the Mother's Day weekend, and to all of our mothers out there, especially the ones who've been watching the stream. Appreciate everything you do, and hopefully your Sunday was as good as ever. So tonight on the stream, we're going to be talking about an interesting podcast that I came across that I'm quite happy about. Also, we're going to check in on futures. Futures are actually in the red pretty hard tonight. So if we look at the S&P 500 E-mini futures contract, ticker symbol ES, we're down about 50 points. That translates to probably a little bit over 1%. If we check in on the Dow, ticker symbol YM, futures are down about 350 points or 1%. And lastly, if we look at the NQs and the NASDAQ E-minis, the NASDAQ 100 that is, we're down about 153 points, a little bit over 1%. So down heavily across the board. Cryptocurrencies are taking a hit as well. You know, we've been talking about probably for almost over a month now that I would like to see, especially a lot of the mega cap cryptocurrencies like Bitcoin and Ethereum, actually correct all the way down to their 200-week moving averages, which is, I think that's where they'll go, roughly about 27,000. But I wanted to share a really good podcast with everybody. It's called On the Tape. So if you, let me see if I could check in what the Nightbot command is. I always forget these. I think it's !tape, T-A-P-E. If you type that in the chat, you'll be able to take a look at the podcast we're talking about tonight. But it's so windy out here. It's probably like 25 to 30 mile an hour winds. So we may keep it short tonight. We'll see who we have in the chat. Let's see who we have in the chat, my friends. Who do we got? Hey, we have Mr. Ming says, hey, Tom. Bianca M says, hello. Two Wheel Pines says, hey, Tom, long time no see. Yes, Two Wheel Pines. Very good to see you, my friend. Hope you are enjoying your Mother's Day weekend. Happy Sunday, everybody. You know, it's going to be a crazy week again on Wall Street. We're getting a lot of economic data, economic news, especially that CPI print is going to come. You know, so I think this CPI print that we're going to get on Wednesday, I believe, is really going to forecast to the market, you know, if inflation has peaked or not. If inflation has peaked. Let me sort of get behind here because the wind is crazy. Well, right now we are behind the shops at the Plaza Hotel. I see Sanjib is here. Hey, Sanjib, good to see you. 48. Says, good evening, Tom. How are you? I'm doing really good. I had a good weekend. It was a good Mother's Day weekend. Jonathan Richards says, hello, Tom. Hope you've had a great weekend. I did. I wish the same for you and your family, Jonathan. Winger says, hi, Tom, and happy Mother's Day. Thank you, my friend. Mr. Ming is here. Bianca M. My good friend Paul Greenwell is here. Good to see you, Paul. Dave Moore says, howdy, Tom, and everybody else. Good to see you. Hey, Michelle McGraw. Happy Mother's Day to you, my friend. Hopefully you had a good day today on this Sunday. And hopefully, wherever you guys are watching from, hopefully the weather has been a little bit better than it has been here in New York. It was probably in the mid-40s, very windy and very rainy. Mike Skate TV is here. Good to see you, Mike Skate TV. ABD Samad says, can talk about raising the interest rate. Yeah, we'll talk about that. 3T3 says, hopefully CPI has peaked. Indeed, hopefully it has. Hey, Razzle Dazzle 786 is here. Says, hey, Tom, nice to see you. Been MIA, busy with Ramadan and Eid. Yes. So Razzle Dazzle, hopefully your holiday season is going well. Hopefully your fasting is going well. I know a lot of my Muslim friends are. I guess you're not allowed to eat from sunrise to sunset. So that's a heavy task. So hopefully everything is going well with that. And yes, so Razzle Dazzle, you're preparing for the move by the end of the month. Very cool. You know, it's a good time to move here because, I mean, usually the beginning of May and sometimes mid-May, the weather is iffy. Prime example yesterday and today. So I think you're moving here at a good time. Hey, Carson is here. Says, hey, how you doing, Tom? Good to see you, Carson. Welcome. Welcome back for another stream. Hopefully you're well. Anna Andrews says, happy Mother's Day to your mom, Tom. Thank you. I will make sure I tell her. The ABX girl says cold and dreary in North Carolina for 2 days and storms. Dan Zhang is here, says, hey Tom. Peter Webley says it was 72 degrees in LA today. Jealous about that, 100%. You know, it's actually not too bad now. It's just windy and a little bit cold. Now. But here we are outside the Plaza Hotel. Ken Glass is here. Welcome, my friend. Santo. Just making sure we don't miss anybody. Good to see the ABX girl. But yeah, for those of you who are just joining, wishing everybody a very, very happy Mother's Day weekend. Hopefully it was fantastic. Hopefully all the mothers out there got either some time to relax or, maybe your family took you out for a nice meal or something like that. So hopefully that was the case. But we're right outside the Plaza Hotel. And right now we are looking at 220 Central Park South. Ken Griffin owns a big piece of property in that building. But it's going to be a big week for the markets because I think maybe not the number one topic of conversation, but one of them is inflation. Inflation is the key to this market because that is what the Federal Reserve is watching. And many analysts on the street think that inflation perhaps has peaked. So I think we're going to get a lot of clarity on that as the week progresses and we get that very critical CPI number out. Hold on, let me adjust the camera here. Hey, Yogi Bear fan is here. Good to see you. Paul is here. Welcome, everybody. And right now we are outside of the Bergdorf Goodman, right here on 5th Avenue, on this extremely windy Mother's Day and quite cold Mother's Day in Manhattan. But on Wednesday, May 11th, can't believe it's already May 11th. Insane. Pretty soon it's going to be the summer. But the Bureau of Labor Statistics will release its Consumer Price Index for April. Many economists on Wall Street are expecting for a 8.1% year-over-year reading, while the core CPI, which excludes volatile food and energy prices, is seen jumping 5.9%. This compares with increases of 8.5% and 6.5% respectively in March. So even though these prints are pretty high, we do seem to be having some slight deceleration from the months prior, which is good news. So I think the whole theory here is that if we have inflation cooling at least a little bit, maybe the Federal Reserve won't get so aggressive with raising interest rates. But obviously we already saw last week that we got about a 50 basis point rate hike. The market actually rallied on that day. But I think the majority of that rally, obviously, as we talked about, probably short covering rally. But the biggest deciding factor of that day, I think, was the clarity from Fed Chair Jerome Powell to unwind that massive multi-trillion-dollar balance sheet. So hopefully, should have inflation have peaked, I'm not so sure about that. But maybe the Federal Reserve will tend to back off and put some stability in the market. Hey, Anna is here. Says happy Sunday. Good to see you, Anna. Welcome. Brian Flores says hello. Good to see you. Lena Sandoval is here. Marilyn. Welcome. Carson says hopefully we've peaked. Yeah, so I was reading an interesting article in the Wall Street Journal today. I'm not sure if anybody got it over the weekend, but one of the things that we've been talking about, and I think we dedicated an entire stream to the United States. Hold on, let me just adjust the camera here. I think I had it on Zoom. But we dedicated I think this was about a month ago now. I'm not sure if you guys remember, but we talked about the energy infrastructure or the power grid in the United States, its reliability. And we were talking about the probability of mass power shortages and energy shortages in the United States due to the fact that, not to get political, but let's just say the current administration's goals to sort of wane ourselves off of non-renewable energy sources. So I think we could all agree that everybody wants to use cleaner energy. That's the goal. But I think we're sort of making a little bit, I think we're making stretch goals. Let's just say that, because if we look at the data, a lot of these power producers are telling the market that the renewable infrastructure in the United States is not enough, at least as of now, to take over the non-renewables in terms of energy production. So there was an interesting article today, well, I should say Saturday, in the Wall Street Journal about how a lot of energy companies are warning about widespread power shortages across the United States because we're turning down nuclear power plants, we're turning down natural gas, and we do not believe, or they do not believe, that a lot of these renewables will be enough to sustain our current energy usage. Liquid Nate is here, says hello. Good to see you, Liquid Nate. Hope you're well. Muhammad is here, says good morning, Tom from Malaysia. Hope you're well. Good to see you. Hope everything is going well with you. Patricia Ivory says good evening, Tom. Good to see you, Patricia. Hope you're doing well. Sunshine New York City says good evening, Tom. Good to see you, Sunshine NYC. Happy Mother's Day to you. Vinny Castellano says good evening, Tom. Happy Mother's Day to all the moms out there. Right back at you, Vinny Castellano, watching from Staten Island as always. Hopefully you and Maria had a great weekend as we are crossing Madison Avenue here. I think we're going to take a walk down Park Avenue. I think we're going to take a walk down Park tonight. Mr. Ming says, ooh, I wanted to mention I'm going to open a savings account to build interest. Very nice. Yeah, I've been getting, there was a lot of chatter in the Discord, especially in my email box too, about, with rates rising, does that mean banks will increase the rate of interest that they pay out to me and you? And the answer is yes, but still it's going to be minuscule. Liquid Nate says, I actually just got back from a stroll myself. Awesome, love that. Oop, Herbert, I must have missed it. Thank you, Herbert. Says Tom, Plaza Hotel and Residences. Yes, Herbert, thank you for the $2 donation. You are way too kind. Thank you for the support. Herbert, much appreciated. Bernard Friedman says, hey, Tom, good to see you, Bernard. Victor's here. Got a full house tonight. Good to see everybody. Abdullah is here. Welcome. Gregory says, hey, Tom, how are you? Why don't you ride your board anymore? So the board is coming back. But it's been a combination of, we've been in winter season, so it's not very enjoyable to ride the skateboard in the winter when it's freezing, raining, snowing. And I've just been going through moving, and work has been picking up a lot, but it will be back very soon. Hey, AK is here. It says happy Mother's Day, Tom. Good to see you. Action Kid, hope everything is well in Miami. I'm going to be down there this week. So I'll be back in Miami this week. So hopefully all is good. Davi says, hey man, just found your channel a couple weeks ago and been enjoying it so far. I'm going to New York City in October for the first time. What are the coolest finance-related places to visit? So probably the New York Stock Exchange, 100%. I'm not sure if people are allowed to go in the New York Stock Exchange anymore. I know back in the day, I think this was pre-9/11. Pre-9/11, I actually think you were allowed to do a tour of the New York Stock Exchange. I don't think you're allowed to anymore. I mean, I could be mistaken, but I think after 9/11, you're not allowed to go inside the stock exchange. Unless anybody else in the chat knows different. But I definitely check out the Mighty Bowl. Also, if you want to check out some cool finance-related things, I would definitely see the Morgan Library. Also, in addition to the Morgan Library, I would visit the Henry Clay Frick Museum, one of my favorite museums in the city. And oftentimes they actually move some exhibits from Morgan Library to the Henry Clay Frick Museum back and forth. So very, very cool. Yogi Bear fan, good to see you. Paranormal Witness Girl says, you moving again, Tom? So not moving, I'm just going to be going back to my home in Miami this week. But, I do have to be back. Well, I'm actually going to be in Atlantic City, New Jersey the week of May 25th. There's going to be a big cybersecurity event in Atlantic City, New Jersey that week, which I will be attending. So probably all of that week I'll be in New York. I have to see. Is it possible to take the Amtrak train to Atlantic City? Because I really am not looking forward to driving. I'd rather take the train if possible. Mike Simmons, what's up? NNB 045 says, happy Sunday night, Tom. Good to see you. NNB 045. A bot in Soho says, yo, what's up, Tom? I got a pied-à-terre nearby there. Oh, very cool. So a pied-à-terre is, like a studio apartment where you don't live there full-time, where you just come and go? Laura M says, hey, Tom, do you ever have a day off? Yeah, so usually I take off the weekends. I'm not doing stuff really that work-related. So usually Saturday and Sunday, I'm not doing too many things work-related, but usually Saturday and Sunday is when I take the time to, read the papers, IBD or Barron's and things like that. But what about you? So we're headed towards East 56th Street here. Action Kids says, I think the most direct public transit to Atlantic City from New York City is the bus from the Port Authority. Ooh, so I may have to do that. Because I really don't want to drive. I just want to, I want to either take the train. I got to figure it out. I'll probably try to look it up on Google Maps. But I think you're right. Port Authority, you could take the bus. I may have to do that. Media is here. Good to see you. Teresa Roberts says, cybersecurity is very cool. Indeed it is. Otto is here, says, hey, Tom. Good to see you. So if we take a look at futures for those of you who are just joining, we started streaming about 20 minutes ago. And futures were down pretty big across the board. The S&P 500 E-mini futures, or ES, was down about over 1%. I think across the board, Dow Jones Industrial Average and the NASDAQ 100 are also down over 1% in futures trading. If we take a look at the cryptocurrency markets, like the big mega caps, I guess you could call them the blue chip cryptocurrencies like Bitcoin and Ethereum, they are all down. And we've been talking, and I've been posting a lot on Twitter. So if you guys want to follow me there at Walks Wall Street, I've been posting about how I think a lot of these larger cap cryptocurrencies like Ethereum and Bitcoin are all going to retest their 200-week moving averages. So I think as the Fed continues to tighten, as the Fed continues to raise interest rates, if we look at the correlation, at least as of right now, the Bitcoin is very correlated to the NASDAQ. So it's very risk-on asset, as opposed to what many, I should say, analysts want the particular digital asset to be. Now, I do think you'll probably have a decoupling over the next few years, where it'll probably have a different beta than the NASDAQ. But for right now, a lot of the cryptocurrencies are trading like very high beta speculative tech stocks. So I think, should we correct to the 200-week, I think that's a fantastic opportunity to really start some long-term positions there, in my view. Mission TV, good to see you, Mission TV. I hope you're well. Good to see you. Dodo Bird 2012 says, do you think it is a coincidence that the economy has worsened ever since Trump left office? Yeah, so I think it's good to talk about that, actually. I think it's good to talk about that. So I think a lot of people I think a lot of people really give presidents too much credit, both Democrat and Republican, in relation to market performance under Democratic presidents or Republican presidents. So there was a really good interview that Paul Tudor Jones and Stanley Druckenmiller did, I think at the World Economic Forum. I forget what it was, what the venue was, but it was a really good interview discussing just that. Miss Brown Eyes, thank you so much for the $2 donation, and happy Mother's Day to you. And the theory was Main Street, this is paraphrasing what Stanley Druckenmiller said. Stanley Druckenmiller says Main Street oftentimes associates too much with presidential outcomes and stock market performance. He's like, if you look at the main driver of the market, ever since we decoupled from the gold standard, it's the Federal Reserve, and that's why there's Paul Tudor Jones and Stanley Druckenmiller. Their main go-to is, what is the Fed doing, right? What is the Fed doing? So if you think about it, what happened under President Donald Trump? And I'm not trying to get political at all. We had the COVID crash, and what was the reaction from the Federal Reserve? Is to bottom out interest rates to zero, quite literally, and start acquiring assets pretty much at a rate nobody's seen in our lifetimes, right? Buying mortgage-backed securities, buying U.S. Treasuries. And there's a direct correlation between the growth in the Fed balance sheet and the performance of equities, especially since the lows of 2008. So, and we really learned this also when we listened to Ray Dalio's podcasts and his books. So Ray Dalio, for those of you who don't know, is the CEO and founder of one of the largest hedge funds ever, Bridgewater. And markets run in cycles, but the bigger cycles to pay attention to is the credit cycles, right? So when interest rates are low, when the Federal Reserve is printing money, that doesn't only create inflation in the currency, but it creates an inflationary environment within asset prices. So if you look at the price of real estate, U.S. equities, pretty much the price of anything has gone up. But when you have a tightening cycle or a hiking cycle where interest rates are going up, and interest rates just so happen to be going up right now under the new administration to really, fight off inflation. So without being super long-winded, I think a lot of people, well, not me, Paul Tudor Jones, Stanley Druckenmiller, and I think I agree with them, think that it's not really about who's president. The market really doesn't care about that. It's all about liquidity. What are interest rates doing? What is the Fed doing? Are they being accommodative to business? Are they not? And I think that's why we see these exacerbated boom and bust cycles now that we have pretty much the managed market from the Fed, I think. Anna says, let's take it for a test drive. Yeah, so this is the Ferrari store here on Park Avenue. Very conveniently located, I would say. Yogi says, Trump left a lot of debt. Agreed. Iris Lou, good to see you. Hopefully you're well. Gene says 401ks are losing a lot right now. Yeah. And the funny thing is, technically the S&P 500, the broader stock market, is not yet in a correction technically. Not yet in a bear market. Apologize. The NASDAQ we're down over 20%. But if you really look under the hood of this market, which we've been talking about for a while, the vast majority of stocks are down. Especially a lot of the tech stocks are down about 50 to almost 90%. You look at some of these crazy ones like Peloton. These things are quite literally down 90%. So, pretty wild there. So we're going to walk to one of my favorite buildings in Manhattan tonight. It is the Seagram building, which is right here. You guys will see why it's my favorite in a minute. Powerbox says hello from Romania. Hey, welcome everybody from Romania. Hope everybody is well in that side of the world. Soho guys here. Yeah, so Sunshine After Rain, happy Mother's Day to you. And Sunshine After Rain just dropped the link to Ray Dalio's Principles YouTube video. It's fantastic. If you want to learn all about credit cycles, market cycles, and the rise and fall of empires, I would very highly suggest read Ray Dalio's book Principles, or you could watch the YouTube video where he pretty much summarizes the book into a short 40-minute video. It's fantastic. Once again, Ray Dalio, the founder of Bridgewater, which is in Connecticut, and the largest hedge fund in the world. Chris Beeman is here, says, hey, Tom. Hey, Chris. Happy Mother's Day to you. Chris is joining us from Arizona. I hope you're doing well. Hey, Mr. Ming, says, Tom, I am from Iceland, but I moved to Canada at a young age. Very cool. Love that. You know, there's actually a lot of people, I've been running into a lot of people from Toronto in the city this weekend, maybe visiting for the holiday weekend perhaps, but yeah, I've been running into a lot of people from Toronto. So here we are, right across the street from my favorite building in the city, the Seagram building. I'll show you guys the top. Hey, Perry Willick says, hey, Tom, love the sunset earlier in New York City. You know, I wasn't able to see it. It was too cloudy. You know what? Maybe I did see a teeny bit of it, but here we have the Seagram building. Dodo Bird 2012 says, Tom, prices of tech stocks have plummeted to prices that are even lower than pre-COVID levels. For example, Spotify was around $150 in 2019 pre-COVID. Spotify is now below $100 a share. Yeah, I think you're 100% right. Well, you are 100% right. And that really has to do with, I think, just the multiple compression, or PE compression. And we talked about this in length. I tried to do a pretty deep explanation in the newsletter. So if you guys want to read more of my in-depth thoughts on the market, if you type !news, NEWS, in the chat, the Nightbot will drop a link to the Behind the Street newsletter, which is a free financial newsletter I write for everybody in the chat every Tuesday. But as interest rates are going up, if we think about a lot of these very high growthy tech stocks, a lot of the earnings of these stocks, if any, are predicated in the future, right? So if you think about like a very solid company like a Costco or something like that, I like to call them like the very conservative, very high predictable earnings. It's not going to be extremely high growth, but very, very predictable earnings. So a lot of those companies have earnings right now, but a lot of tech stocks have earnings that are predicated in the future. So when you have an environment of artificially low interest rates, the future earnings of those tech stocks are worth more today because interest rates are so low. But as the Federal Reserve hikes interest rates, and as interest rates go higher, the value or the present value of their future cash flows are worth less today, if that makes sense. But there was a great article today in Barron's talking about one of the most successful tech hedge fund managers of all time, and I believe I programmed it into the Nightbot. I always tend to forget the program, but if you type !tape, TAPE, it's going to drop a link to a podcast that I think does a really, really good job in explaining technology companies' valuations in relation to interest rates, in relation to having beat and raise quarters. So it does work. So if you click the link, it's going to actually take you to an Apple podcast page called On the Tape. And I actually just found this podcast today from reading a Barron's article. And since we always talk about technology stocks, how do we evaluate them? How do we sort of identify the value of their cash flows? If you listen to that particular podcast episode, they do a really good job of explaining why Wall Street will assign specific price to sales, price to earnings ratios to stocks that have exceptionally high growth rates, depending on which interest rate environment you're in. So I think it's a really good podcast for a learning experience. So if you guys want to check that out, feel free to check it out. So we are standing on the corner of East 52nd Street and Park Avenue. We are overlooking the one and only One Vanderbilt, as well as the MetLife building. Hey, Bernard Friedman, good to see you. Thank you for enjoying. James is here. Rob DeCarlo says the temperature will be in the 80s this week in Ohio on Thursday. That's fantastic. You know, hopefully New York City gets some of that weather very soon. So this is right outside the Seagram building, my favorite building in all New York City. Harry says, have you passed 240 Park Avenue? I am not sure. I am not sure. But I will find out for you. But this is a view of 432 Park Avenue. Hey, Lone Wolf says, Tom, what was the name of Ray Dalio's book? The book is called Principles. So if you Google Principles by Ray Dalio, the book should come up. But he also just came out with an even better book about market cycles and the rise and fall of empires. Hey, James Bond is here. Good to see you, my friend. Hope you're well. So speaking of interest rates, one of the main things that really predicates the Federal Reserve decision on rates is the CPI numbers, which we will be getting on Wednesday, May 11th. That is when the Bureau of Labor Statistics releases the Consumer Price Index, or the CPI. And everybody is expecting a reading of 8.1%. And hopefully we get a print a little bit lower than that, and that'll signal to the market that inflation is potentially peaking, potentially. Hey, JL says, Tom, the lights on the top of the Empire State Building are in honor of the European Union tonight. Very cool. Yeah, as we make our way down to 34th Street, we'll check that out. So what color is that, by the way? So this is 375 Park Avenue, the Seagram building. This is my favorite building in Manhattan. Hey, Arnold says, hey, bro, hope you're doing well. I'm doing really well, Arnold. Thank you for joining, and hopefully you're having a good Mother's Day weekend. So 375 Park Avenue, the Seagram building. You know, there used to be, I think this was on the 16th floor of this building, there used to be one of those sort of WeWork type companies. The company was actually called Serve Corp. I think SERVCORP, Serve Corp. And it was sort of like WeWorks, in which case you could rent dedicated desk space. So sort of like one of those open floor plan workspaces that you could rent on either an hourly basis, a monthly basis, or something like that. And I was so excited because I was like, oh my gosh, if I could work in the Seagram building, that's my favorite building, I'd do it. But then once COVID hit, I believe either they closed down the office or the entire company went out of business altogether. Although I do know that Serve Corp does have an additional location in the new One World Trade Center. So I think they occupy the 22nd floor of One World Trade, company called Serve Corp. But one of the reasons why I like the Seagram building so much is because when you walk out of your office doors like this, look at how far away the street is. It's almost like an open public park right at the front door of your office building, and you get phenomenal views here too. I'll try to show you guys the beautiful views as you walk out of the Seagram building. SME Media says, Tom, did you say the reason why this is your favorite building? Yeah, so it is my favorite building because it's built so far away from the street. And it has a fantastic view. The vast majority of these buildings, I'll try to move away from the lights, but the vast majority of the buildings on Park Avenue are built literally right on top of the street. So this is one of the only buildings, or the only building on Park Avenue, where you essentially have a park. It's almost like a park right outside of your office building. So you have two beautiful fountains, places to eat lunch outside. And when I used to work in the Marsh and McLennan building back in the day before the pandemic, I actually used to eat lunch right here almost every day. And they have amazing views from the building. Reyes says, let's go to Chicago. You know, I've never been to Chicago, but I very, very would much like that. Israel is here. Western Mass Dave is here. Happy Mother's Day weekend. British Gray from Tampa, Florida is here. Good to see you, British Gray. So I'll just take one more quick walk around the patio here on the Seagram building. Hey, Ron Bose says, Tom, can you comment on what's going on with the decline of Carvana and the online auto sales industry in general? Yeah, so Ron, let me just get your name right. Ron Bo. So we were actually talking about this on a stream, I think 2 weeks ago. And it's great that you bring it up, and here's why. So Carvana is one of those disruptive companies that are trying essentially to disrupt the way people purchase automobiles, right, to online. There's also another competitor called Vroom. I believe the ticker symbol is VRM. I'm not sure if you've heard of that, but if you guys have heard of that, please let me know in the comments. So these are two very disruptive companies that are trying to change the way people purchase vehicles, right? All online, which I think is great, but here's the thing. These companies are not profitable companies. They lose money constantly. So even though they're growing their revenues, they're money losers. And as we just got through talking about, when you have an environment where interest rates are going up, we just got an abysmal reading of economic activity in the United States. Many economists are forecasting a recession. Money tends to flow out of those more speculative companies that do not have any earnings into companies that have very, very predictable earnings. So I'm not sure if you read last week's Behind the Street newsletter. Hold on one second. Sorry about that. I had to adjust the mic. But in last week's newsletter, I said there was something very funny about the fund flows on Wall Street. And a lot of new buys by the top performing mutual funds are in oil and gas stocks. Stocks like Church & Dwight, ticker symbol CHD. And if you notice something about these stocks, well, the vast majority of them are energy stocks, right? So as we have inflation ripping, as we have crude oil sitting well above $100 a barrel, many analysts and economists and portfolio managers on Wall Street are like, why would I spend money buying a company that has negative earnings when we have rates going up and we could potentially be going into a recession? Why don't I buy a stock like Walmart? Because even if we go into recession, people are still going to need to buy things at Walmart. Why don't I buy a company like Church & Dwight, ticker symbol CHD? Because during a recession, people are still going to need to buy toilet paper. People are still going to need to buy baking soda and toothpaste. So we've been seeing a lot of the fund flows into these type of recession names and out of disruptive growth. So Carvana, as well as Vroom, I think those are the two main competitors in that space. Even though their revenue growth is extremely good, I haven't really been following these two companies, but I've heard of them. I know they were very, very hot stocks during the pandemic, but as we talk about all the time on the streams, it's okay to buy a company with no earnings, but it increases your risk exponentially, because when the market turns, those are the absolute first stocks to get sold off. The companies with no earnings, the companies with no earnings are the first ones to get crushed. So Vroom, I think, is down 90%. Carvana, I think, is down the same. You look at a company like, what's it called? The bike one, Peloton, that's down 90%. So I think, to answer your question, I think big institutional investors on Wall Street are positioning themselves for a recession and for an extreme hiking cycle by the Fed, as well as a sort of balance sheet shrinking of the Federal Reserve's balance sheet as well. Honest is buying a car from Carvana is unique. It's like getting a car from a vending machine. Yeah. So I think these companies will do good over the long stretch. But, one of the rules that I have, which you guys know, is I cannot buy a stock, company. I cannot buy a company if it's not profitable. That's just one of the rules I have. And even though I may miss out on a lot of good opportunities, those tend to be the stocks that get crushed in every cycle when we have a downturn. So that's why I always like to look for stocks that have exceptionally strong earnings, as well as good earnings stability. Because if you have volatile earnings, like, for example, an energy company, energy is very cyclical in nature. So that's why I don't really buy these oil and gas stocks, because I don't really understand it. One of the Warren Buffett and Peter Lynch's quotes is, look, don't invest into something you don't understand. And those type of industries tend to be very cyclical in nature. Western Mass Dave says, no profits, no buy. Indeed. Good to see you, Western Mass Dave. Rob DeCaro is here. Says, where is James and Carla and Hudson? Which apartment are they in? Did they buy a place here on Park Avenue? I didn't know that. Well, congrats to them. That's fantastic. There's not many apartment buildings here on Park Avenue, but I think if you head more uptown, there's some very nice ones. Zay Wangs is right on, because the dream price will be taken out in a down. This sold off the hardest. Agreed. Sally is here. I'm going to try to adjust my microphone wire. My microphone wire is all tangled. James says, now is the time you should be dollar cost averaging in. So I agree with dollar cost averaging to a broader index, but not individual stocks. Because, if people are saying, there's a lot of people still, because I read some of the message boards, there's a lot of people that are attached to stocks almost like a cult. There's a very famous saying by William J. O'Neill, and he was the founder of Investors Business Daily. He's like, there's no good stocks. There's only stocks that go up and down. So if the stock isn't going up, it's not a good stock. So you got to be able to part ways with your favorite company. But in 2018, I think the S&P 500 bottomed at 15x multiple to earnings. And I'm not sure where we are now. Does anybody know what multiple we're trading at? And I think the NASDAQ bottomed out around the same thing. But here we are at Blackstone on Park Avenue. Blackstone actually reported a decent quarter, and the majority of their earnings actually came from real estate. So their real estate portfolio did fantastic. And we were talking about Blackstone because a lot of people are up in arms on Main Street, because you'll have big companies, I should say real estate investment trusts or REITs, even private equity as well, venture capital. Thank you, James. The S&P is around 20x multiple right now. Okay, so James, if you want to look this up, just because I don't really remember it 100% off the top of my head, and I don't want to be spreading fake news. I think in 2018, does everybody remember the massive stock market crash in 2018? I remember it bottomed on Christmas Eve. Christmas Eve, I think the S&P was down I think over 3%, I think. And I think then the S&P's multiple was 15x, I think. But here's something interesting. So in 2018, what happened when the market bottomed? And this is like a reoccurring theme. The Federal Reserve steps in to the rescue and puts a bid under the market. But it seems like this time, and I never want to say this time is different. This time it doesn't seem like Jerome Powell. Well, first of all, the Federal Reserve's job is not to keep the stock market propped up. That's not its job. But it doesn't seem that Fed Chair Jerome Powell is too concerned with market movements. I mean, the only thing he did say to sort of, I guess, not make the markets freak out is he did assure everybody on Wednesday that there will be absolutely no 75 basis point rate hike. Because if you remember correctly, there was a ton. I remember watching CNBC. Sometimes I have CNBC on in the background. Really, the only times I'll watch it is if like Paul Tudor Jones or Stanley Druckenmiller's on, somebody like really, really good. But there was a managing director, I think she was from Jpmorgan, really smart lady. And, hold on, let me cross the street here. I think we're gonna hit a dead zone here, 1 second. One of the main things she was talking about, sort of losing my train of thought here, was if the Federal Reserve is going to, try to save the market this time. So even though Fed Chair Jerome Powell said there will be no 75 basis point rate hike, is that him just trying to keep the stock market from crashing, or is he really serious about fighting inflation? Because the biggest thing is a lot of economists think that we are tightening into a recession, which could create potentially a stagflationary environment. So stagflation is when the economy is not growing, but inflation is ramping. So if we think about what happened in 2020, I think it's some crazy statistic, like we printed over 70% of all US dollars in existence in 2020 and 2021. So there's going to be ramifications for that. And as the economy is slowing down, as the Federal Reserve is unloading its balance sheet, or unwinding, I should say, we could potentially be tightening into a recession. And if the Federal Reserve doesn't, if the rate hikes, let's say this, if the rate hikes do not cure inflation, well then it's pretty much we did it for nothing, because we still have inflation and the equities market's getting killed and the economy is slowing. James says, Tom, it's the late 70s repeating, perhaps. NE says, Tom, do you still think investing solely in the S&P 500 is wise? Yeah, so in my long-term retirement accounts, I pretty much have the majority of my money just indexed in the S&P, because I believe over time corporate earnings in America will grow. So I do think it is a good idea, but I can only speak for myself. I can't give out financial advice, but that is what I do. Hey, Anthony Tripp is here. What's up? Says take advantage of the dip in gold. Go into physical gold and platinum, says Anthony Tripp. Good to see you, Anthony. Hope you had a good Mother's Day weekend. Wow, the MetLife building's looking nice. Hey, John is here, says, hey, Tom, how are you? I'm doing really good. Dogman says, Tom, Powell said that the inflation was transitory and that they had it under control. He is finessing the markets. Yeah, I mean, I think that... we knew that the whole transitory thing was BS. But do I think that Federal Reserve Chairman Jerome Powell knew it was BS? I probably think so. I mean, he's not a stupid person. He's a smart guy. So then it comes down to the point, is he being disingenuous, or is he just doing it to try, because he knows what's going to happen if he freaks people out? But this is one of my favorite sculptures in Manhattan. You know, I used to have the exact same sculpture in the basement of the lobby of my old of my old office building. The only difference was mine was a black color, and this one is sort of like a pink. Anthony's like, Tom, I love your streams, but they're making me homesick. Hey, Eyeglass Lady is here. Good to see you, Eyeglass Lady. So one other thing, so now that we're talking about inflation, there's one other thing I wanted to mention quickly, and I wanted to get your guys' thoughts on it. If we look at money velocity, so money velocity is the rate at which cash funnels through an economy. But money velocity, we're not really seeing an uptick in money velocity, which means a couple things, which means like the economy is not really doing as well as it could or it should. You know, there's an old saying on Wall Street, the stock market is not the economy. Right? Especially, I think that rings more true now than any time in history, because if you think about it, I believe about 30% of the market capitalization in the S&P 500 is made up of 5 stocks, or 10. And those are all the mega cap tech stocks. And I think this is why we're just starting to see damage in the broad-based market indices, because the first stocks to go are the very speculative stocks with no earnings. And those tend to be stocks with very low market capitalizations or low market caps, so the damage won't show up in the indices, right? And in this cycle, that just so happened to be a lot of those special purpose acquisition companies, or the SPACs, right? No earnings, these companies are horrible. I don't really want to throw too much shade, if you will, at those companies, but those were the first to go. All of them are way below their listing price. Then it's actual decent companies, like software companies, but that were just trading at ridiculous multiples to earnings, multiples to sales, just because we were in a low interest rate environment. And then finally, the last ones to fall. You know, there's an old saying that the generals are the last to go, or the generals are the last to die. And the generals of the market were companies like Tesla, were companies like Alphabet, ticker symbol GOOGL, Apple, Nvidia, all of the big mega cap tech stocks, Microsoft. So once those start to roll over, that's when a lot of the damage starts to show up in the broad-based indices, because they make up such a high weighting in those indices. But here we are outside the Jpmorgan Chase building right here. But right across the street is where the brand new Jpmorgan Chase headquarters will be. I think it's this construction site right here. It's going to be a beautiful building. Hey, Charlie Richardson is here. Good to see you. Says hello everybody and happy Mother's Day. Good to see you, Charlie. Thank you for joining. I hope you're well. Hey, War Walker. Welcome. War Walker is joining us from the 305. Sammy Basie says, hey Tom, happy Mother's Day to you and to everybody. Appreciate that. British Grace is my favorite building, is the Hemsley building. Well, it's right here. I'll give you guys another look at it. So you see the Hemsley building with the One Vanderbilt building to the right. So I think now more than ever, you know, there was an interesting article in the Wall Street Journal probably over a month ago now. We dedicated an entire stream to it. So if you type !power, POWER in the chat, I really wish I remembered the author's name so I could give her a shout out. She did a fantastic job of really breaking down just how vulnerable the US power grid is. And mainly it's because, and I want to be careful with how I word this, because I'm all for renewable energies. I'm all for combating climate change and making the world a better place, but you got to be realistic about it. You can't crash one of the world's strongest economies because you want to have everything 100% powered with renewables. It's just not real. It can't happen. You have to slowly wane yourself off. And as the United States is closing down nuclear power plants and closing down power plants across the country, they don't realize that we're not going to be able to generate the power demand with renewables at this point in time. Maybe in 10, 20 years, yes, but not right now. So there's reports coming out. So if you read that article, !power, fantastic article came out about 2 months ago, but there was an additional article in the Wall Street Journal today about how a lot of power companies are warning of power shortages because there's so much regulatory scrutiny on using things like natural gas to produce power, shutting down nuclear power plants, which provide the cleanest energy on the planet, literally. But for some reason, we're shutting those things down. So I think the government has way too big of goals for renewables. I think we should be all on the same page where, yes, we want to invest in the renewables, but we can't do it too soon and take down all of our existing internal power infrastructure because we're going to see massive, massive shortages. BP is here. This is Walks from Wall Street. Happy Mother's Day, Tom. Good morning from Bali. Wow. You know, I would love to visit Bali one day. That seems beautiful weather over there, beautiful place. Hey, Ron Bose says politicians listen to the loudest activists. That's true. And look, I'm all for renewables. I am. But you got to do it. You can't just shut off all of our existing infrastructure without having the support in place for renewables. It's just the amount of power we consume as Americans, it's impossible to meet that demand with only renewables right now. In the future, yes, but not right now. Jetstar says, we know why this power struggle is happening. It's due to the current administration in D.C., says Jetstar. Global Channel is here. Good to see you. Cynthia Beale is here. Welcome. Hey, Hemplord is here. Welcome. Steven says, finally, a realist saying this Kathy Woods is over. They're like, everything will be green, yada, yada. Yeah, I mean, I think a lot of, and I wrote, like, I think this was 4 Behind the Street newsletters ago. Every single market cycle I wrote about has its hero. Every single market cycle has a fund manager that is propped up as the end-all be-all. And for clarification, I think Kathy Wood is unbelievably smart woman. I think she's a pioneer on Wall Street, and I think she has some of the best research and some of the best analysts on Wall Street. That is undeniable. But here's the thing. You can be right on something, but you could be right too early. And for her to keep buying all of these unprofitable businesses all the way down while we're going into a tightening cycle, that is not good risk management. You should never throw good money after bad. And in 10 years, she may be 100% right on the majority of her bets. And I have no doubt about that. But you need some risk management, especially if you're managing other people's money. That's just in my view. You know, a lot of the companies that Kathy Wood is buying in her ARK ETFs, these companies generate no profits. They don't have any earnings. And after we just got done talking about a couple minutes ago on the stream, once the market rolls over, those are the first stocks to get clocked, the first stocks to get hammered. I mean, why do you think that Apple is still trading within a couple percentage points from all-time record highs? Well, because that is where a lot of the fund managers are flocking to safety, because in times of a downtrend of the market, you dump all the junk and the speculative activity and you go towards the quality. But yeah, I think you're exactly right. But Kathy Wood, I think she is fantastic, but not very good on the risk management piece. Western Mass Dave says, Tom, right too early, very interesting. Yeah, I think a lot of those bets will pay off. But, I mean, if you're managing other people's money, you can't afford a 90% drawdown. You can't afford that. Tony says, just ask Californians, they would love to use some air conditioning in the summer. Yeah, I mean, it's a big problem, the energy crisis in America. But if you guys want to read, so another comparison I made is usually in times when the market is going gangbusters and everybody's making money and it's all great, you tend to see these ridiculous articles come out in the paper. And I put in the Behind the Street newsletter an article that was very concerning to me. And on the day the article came out, that was the exact top of all of these ARK innovation funds. And many people in South Korea were calling Kathy Wood the money tree. They're like, oh, she's the money tree, she can't lose. And everybody was literally dumping all their money into her funds. I'm like, okay, that's probably the top. When you see that irrational exuberance, as it's called, that's when you are getting close to some sort of euphoric blow-off top. So if you guys want to read that article that I wrote, if you type !news, NEWS, in the chat, it'll drop the link to the Behind the Street newsletter. If you punch in your email, you could sign up for the free investing newsletter anytime you want. But this is the Yale Club, which is one of my favorite buildings. I've never been inside, but the architecture on the outside looks fantastic. But just for clarification here, I know, lately on the streams we've been sounding a bit bearish, mainly because the stock market is going lower. But in times like these, this is when you really need to be in tune with the market, looking for those leading stocks that are showing relative strength. What companies are compounding out their earnings at a 25% plus annualized basis or a compounded annualized growth rate? Because when the market does turn up again, in which it will, it always does, it may be a week from now, it may be a month from now, it may be multiple years from now, but there will be new bull markets. There will be. And I think a lot of investors pay attention to the stock market at the wrong times. During a raging bull market, you don't really need to be paying attention to the stock market all the time, because stocks are going up every day. But what happened in 2020 and 2021, it seemed like everybody was obsessed with the stock market, trading these individualized speculative companies with no earnings, no sales, no nothing. The downturn, the vast majority of people, they forget about it. They go away. And we are seeing a lot of this data. There was some data out of Robinhood, which I called this on the stream probably about 6 months ago. If you look at overall trading volumes on a platform like Robinhood, where the vast majority of the customers of Robinhood are first-time stock speculators with very small accounts. So their AUM is very low, probably about $5,000. The trading volumes on Robinhood have literally fell off a cliff, down 90%. Because, and you guys know my thoughts on Robinhood, I'm not a big fan of the company. I think they're borderline unethical, I think, in a way. I think one of the good things that they recently did is they took away a lot of the encouragement to turn over your account. Like, I think if you buy a stock on Robinhood, they, confetti's popping all around and blowing in your face. And I think that's very off-putting for an investment platform, because that essentially gamifies investing. Like, you're betting on the Yankees to win the World Series or something. And I think that's very dangerous, especially if you're dealing with people's hard-earned money. And a lot of the times it's their retirement account. They're gambling in very speculative, high-leverage derivative products like options and things like that. And the vast majority of them really don't know what they're doing. But, Robinhood is a private company, and their goal is to make money. And they make money when people turn over their accounts. Weston Mass David. Hey, Brittany McMurdy's here. Brittany, good to see you. Always a pleasure. Brittany McMurdy, happy Mother's Day weekend. Hopefully you had a good one. Brittany, we are outside Grand Central Terminal, 42nd Street. I'll show you guys some beautiful flowers here. But yeah, so just, you got to stay the course. Yogi says, let's do the GameStop thing again and the AMC theaters with Robinhood. Yeah, I think that was all nonsense. Strider 1239 says, Tom, are you a Yankees fan? So I am a Yankees fan, but by default. I don't really follow baseball. I don't know anything about it. But if I had to root for a specific team, it would be the New York Yankees. So this is the Chrysler Building, everybody. And if you're enjoying the stream tonight, feel free to leave a like on the video and subscribe to the channel if you're new. Hey, Ron is here, says, hello, Tom. Johnny says, hey, good evening. Let's go Yankees. Love that. Jetstar says, Tom, solar is not the answer. The maintenance costs beat the ROI of going solar. So I'm a huge fan of renewables. I mean, there's nobody that loves renewables more than me. But I think we need, politicians are disingenuous. And I think in a way it's very weird. I think politicians need to be disingenuous in order to get elected. Because if you tell people the truth, a lot of people can't handle the truth. And I'm not trying to be funny about that. It's just reality. If you tell somebody, hey guys, we want to really solve this climate change issue, but we still need fossil fuels to run the country and operate. But in the background, we could build out the infrastructure for 100% renewables, and maybe in 10 years, then we can gradually, wane ourselves off. That's not going to get somebody elected. That's going to get people upset. But if you can lie and you could say, oh, let's just cancel, let's shut down all nuclear power plants, let's shut down all coal burning and natural gas burning power plants, and we're going to turn on solar and we're going to build a bunch of wind farms, and it's going to work within a year. They know they're lying, but that's how you can get elected. So I think that's why there's really no ethics in politics, perhaps. But if you set realistic expectations, the people may not like it, but that's real. I think we could totally transition to renewables in 15 to 20 years, but people want it now, but they don't want to live in reality, in my view. Ron says, Tom, I have joined a solar farm here in Illinois, 20% savings for me. Yeah, so I actually have a couple friends who sell their power back to the grid in Florida, which is fantastic. So this is 42nd Street. We're going to walk to the base or the main entrance of the Chrysler Building, one of my favorite spots. Hey, Jetstar is here. This is a gallon of gas in Naples, Florida. Was $4.79. Wow. So what is crude oil trading at now? Does anybody know? I think if you type in ticker symbol CL into Google, that is the futures contract for crude. So I wonder if we're still above 102, 103. ANG says, Tom, any thoughts on Baruch College? I think Baruch is a fantastic school. It is one of the schools within the City University in New York. And Baruch is very famous for being a finance college, for obvious reasons. Bernard Baruch was one of the most famous financiers to ever live. I think it's a fantastic school. I applied to Baruch. I didn't get in. So very, very good school, especially if you want to work on Wall Street. Otto says, Tom, oil is trading at 109. Wow. So I think we put in a high on crude oil, at least a short-term high at about 130 about a month and a half ago. So I'm wondering if we'll retest those highs about at 130, 133. Anthony Tripp says, Tom, diesel is $6.19 here in New Jersey. Western Mass Dave says it's $4.20 in Western Massachusetts. Hey, Eyeglass Lady is here. Says the parking lot at my schools have solar panels and that electricity goes back to the grid. Yeah, I'm interested in that. I'm very interested in that. Putting solar panels on my house. Hey, Michael D says hello, Tom. What's up, Michael D? Good to see you. For the Love of God is here. Welcome. Hope you're having a good one. You know, maybe we'll do a quick lap around the inside of Grand Central Station. I think that would be pretty interesting. We haven't been there in a couple streams. But everybody, speaking of not profitable tech companies, tomorrow, and I think this company is a very good company, by the way, but I would never buy it here because the profitability is not there. But tomorrow, Monday, May 9th, Palantir will be reporting earnings. Also, another earnings report that I'll probably be on and we'll talk about tomorrow is Tyson Foods. I'm very, very intrigued to hear what Tyson is going to say. Obviously, Tyson is huge in the food business. So I think we're going to hear a lot of clarity from the C-suite tomorrow about inflationary pressures on food. Also, besides that, I think one of the main things I want to hear from Tyson is in relation to the labor market, employee turnover. So that is going to be tomorrow. Palantir, Tyson Foods, and I think we have Duke Energy as well, all reporting tomorrow after the bell. But here we are, Pershing Square Plaza. Every time I pass Pershing Square Plaza, I think of Bill Ackman. So Bill Ackman is the CEO and founder of the hedge fund Pershing Square. And Bill Ackman unfortunately took a big bath on Netflix. So he took a big bet, didn't work out. But Bill Ackman is a stand-up guy, so he admitted when he was wrong. He cut his loss and he dumped every single share he had in Netflix. Obviously a Reed Hastings company. And another thing we talk about on the streams a lot, which I thought was interesting when Bill Ackman came out and said, he's like, look, we invest in the companies with very, very predictable earnings. Because if you look at the holdings of Pershing Square, Bill Ackman does not own 100 companies. Bill Ackman is in the boat where he puts all his eggs in one basket and he watches the basket, right? Now, that doesn't mean he puts all his money in one stock. It's spread across about 30 stocks, but still. And I think that's how, over the years, Bill Ackman has really done a good job with outperforming the market in a lot of years. So he's like, look, we're going to take a risk on Netflix, but things change. And the fundamentals have changed. The fundamental story have changed. Hey, DeLargo says, please go into Grand Central Station. Thank you so much for the 50 MX donation. Much appreciated, my friend. And we will go in to Grand Central Station right now. Thank you for the donation. Much appreciated. Hey, Chrissy says, happy Mother's Day. Thank you, Chrissy. Happy Mother's Day to you too. Hope everybody had a pleasant Mother's Day. So check out this hippo right here. So Bill Ackman also made over $1 billion by shorting the S&P 500 during the COVID crash by buying swaps on the S&P 500. But Delago, thank you so much for the donation. Much appreciated. So we will go into Grand Central Terminal now. But since we are at the top of the hour, I just wanted to remind everybody, if you do want to join us and receive a free investing newsletter written by myself every single Tuesday, if you scan the QR code on your screen, it'll bring you to a link of the Behind the Street newsletter. That is a free financial newsletter that I write for everybody in the chat every single Tuesday after the market closes. So if you want to stay up to date on my thoughts on not only the U.S. equity market, emerging markets, as well as fixed income and cryptocurrencies, feel free to scan the QR code and sign up for the Behind the Street newsletter. It is absolutely free and a good way to stay up to date with my thoughts on the market. And a lot of the times when you guys email me more specific questions, a lot of the times we will discuss it in the newsletter and discuss some of the topics we talk about on the chat in the newsletter. Hey, Felipe is here. Good to see you. Yeah, Dan says, yeah, and he lost $400 million on Netflix. I think it may have been a little bit more than that, but you're right. So after Netflix's first earnings report, I think it was either the first earnings report of the year or right at the beginning of the year. They missed earnings. They were down big, about 20% after earnings. Then Bill Ackman announced that his company, or his hedge fund, Pershing Square, acquired a huge stake in Reed Hastings' company. The next earnings report, they bombed big. They missed heavy, and they actually had the first quarter ever of subscriber losses. And then the stock was down over 20%, and it's still continuing to go lower. But let's go into Grand Central Station. You know, I think another reason why a lot of these multiples of these tech companies are compressing here is because the comparables or the comps to previous quarters under COVID, it's going to be very, very hard to beat. Because during COVID, everybody was really forced to have a digital transformation. So you had a ton of pull forward. So it's going to be hard to beat those comps or those comparables. I wonder what they're setting up for in here. Oh, you know, I went to this 2 years ago. I think before the pandemic, I actually went here. This is the squash tournament, sponsored by Jpmorgan Chase. So here is actually going to be a full squash court or arena. They transfer the whole thing, and they play a big squash tournament. So is anybody here a squash fan? I was here before the pandemic they did it. It was really fun watching it. Hey, Skylar Myers is here. Says, hey, Tom, hope you had a wonderful day. Your walks are the best part of my evening. Hey, Skylar, thank you. And I hope you had a great Mother's Day as well. So let's see if we can identify any of the people in the squash tournament. I guess this is going to be the bracket they're going to hang up here. NMB 045 says, Tom, we have a squash court at the office. Very cool. Yeah, it looks like there's going to be a merchandise store, everything. Hey, Gregory is here. Good to see you, Gregory. Hope you're well, my friend. Yogi is here. Welcome. So here we are in the middle of Grand Central Terminal, where you could get the train to the Metro North, which is upstate New York.
Attention Hudson Line customer. This is your final boarding call for your 1020 to Croton Harbor. This train will be making Yankee East, 153rd Street, first stop, and will depart from track number 34 on the upper level. Your 1020.
You know, supposedly this summer they're going to be opening the East Side Access Project. And the East Side Access Project is for the Long Island Railroad. And right now the Long Island Railroad goes to Pennsylvania Station or Penn Station. But supposedly this summer you'll be able to take the Long Island Railroad right here.
Your 1024 to North White Plains, Melrose, first stop, will depart from track number 30 on the upper level. Your 1024 to North White Plains, Melrose, first stop, will depart from track number 30 on the upper level. Attention to waiver line customer. Your 1034 to the waiver.
Hey, Lewis says, what time do you start and what time do you end? So we usually stream about 5 days a week. We try to start at 8:30 p.m. Eastern Standard Time, or whatever time I really get out of work, but usually 8:30 Eastern Standard Time. Yes, Smee Media says, wow, Long Island Railroad to Grand Central. Well, this is a long time in the making. So hopefully it'll actually materialize, but they say the first train is going to be this summer, but I'll see it when I believe it, or I'll believe it when I see it. Hey, WW is here. Says, thank God I got my nightly fix of Tom's late night streams. Appreciate that. Hopefully you're having a good Mother's Day weekend, WW. So we'll take a lap around so I can show you guys. You know, today was Mother's Day, so there's a lot of Mother's Day balloons stuck on the ceiling. Hey, Sally is here. This is a beautiful view, Tom. Good to see you, Sally. Hey, Ron Bowe says, Tom, can you imagine the cost of building of something like that today? You know, so I was on Twitter, and there was an awesome account that posted a beautiful picture of Pennsylvania Station or Penn Station back in 1911. So Penn Station in 1911 looked very similar to Grand Central, and they totally destroyed it. And Penn Station is an absolute disaster right now. I really wish they kept the original architecture in Penn Station. So if you guys want to see that photo of Penn Station, if you follow @WalksWallStreet on Twitter, I did retweet the account. And the account is really cool because it posts all old school videos of New York. So all the old original train stations. And I never knew Penn Station looked like that. Penn Station looks fantastic back in 1911. Cooking says, what's wrong with Penn Station? I think you really have to experience it. It's sort of indescribable. But the good news, I think it's going to get better. I think Penn Station is going to get a lot better. You know, the Moynihan train station is very beautiful now. But Penn Station, not so much. Penn Station, not so much. So I'll give you another shot of the chandeliers here. Hey, Tom says, you ever live stream Leah says, beautiful, good to see you. Yogi says, Penn Station smells like urine a lot of the time. It does, that is the truth. All right, so let us walk up and out. We'll walk down Fifth Avenue. We will walk past the Steven Schwartzman building. And as we always say every night, Steven Schwartzman, he made the majority of his money in LBOs or leveraged buyout deals on Wall Street. Steven Schwartzman also came out with a really good book. If you haven't read his book, very, very good book. Daniel G is here. Good to see you, Daniel G from Buenos Aires, Argentina. Hope you're having a good one. So Daniel G, we were talking about on Wednesday we are going to get the CPI numbers out. And a lot of people are actually predicting that inflation could have peaked in the United States. So I guess we'll find out, but on Wednesday, the Bureau of Labor Statistics will release its consumer price index for April. And the estimate is for about, I think 8.7%, I believe, or 8.1. So if it comes in at 8.1, it's going to be a slight deceleration, but still an 8.1% reading is pretty high. Who Dat Dave is here. Says, my daughter calls the Port Authority purgatory. Oh my God. Yeah, I mean, that's a good point. Port Authority bus terminal is not too pleasant as well. So here's one last look of Grand Central Station and the Chrysler Building. Ron Bowe says, please let it peak so I can buy a car. Well, so the used car market has been insanity. But I think we're starting to see that roll over a little bit. There was an article, I think we covered it, I forget the Nightbot command. But a lot of the used car market are selling for almost MSRP of when it first came out, which is crazy. NMB 045 says, Tom, I heard Argentina, Chile, and Bolivia together have 56% of the world's lithium services or reserves. Fascinating. That is quite fascinating. You know, inflation is a really big problem in Argentina. I think they have, unfortunately, a 50% inflation a year, which is horrible. Mr. Main, good to see you. So somebody is setting off fireworks outside, really? Anthony Tripp says, the Oyster Bar was great, don't know if it's still there. So I think the Oyster Bar closed down for COVID, but I think they did reopen it. At least I think they did. Hopefully it's not closed forever. That place was really good. I used to go there with clients sometimes. Gregory says, Tom, I bought a used car a year ago for a good price. I think I got lucky. Yeah, I mean, there's been, just like how we see the craziness that's going on in the housing market, with a lot of people going into bidding wars for single family homes and investment properties. A lot of people have been doing that same thing in used car auctions, which has been insane. Wow, Daniel G says it's over 50% inflation. Crazy. So Daniel G, since you are in Argentina, sort of what are some of the things that you are doing to sort of hedge against that or sort of overcome that? Is there anything particular that you personally are doing, or fellow, people that live in Argentina? Like, how do you operate in an economy like that? because it's tough here, and we have CPI of about 8.9%. Many economists say that if we actually did the CPI calculation how we did it in the 80s, it would be double-digit inflation, probably to the tune of 15 to 20%. If we had, let's say that if we did the calculation of the CPI how we used to do it. Hey, Average Joe says, hey, New Yorker here. I'm currently working in Buenos Aires. Yeah, inflation here is crazy, 80% approximately. So Average Joe, just so maybe, if you want, how do you deal with that? What are some of the things you guys do? Do you try to just dump the currency as soon as you get paid? Do you exchange it into gold or US dollars or something? Or sort of how do you guys sort of hedge that? But thank you for watching, but that's crazy insight. Thank you for sharing that. Hey, Loop Videos. Good to see us. What time is it now? I'm actually not too sure what time it is. It's probably about 10:30. Daniel G says, we just keep our savings in exchange traded funds. So I'm assuming you have the majority of your exposure in what, US equities? Ah, 1027. Copy that. So we're crossing 5th Avenue and 42nd Street near the New York Public Library, which we're going to check out. If you look straight ahead, this is Salesforce Tower. And if you notice, everybody that we walk past on the street is wearing a winter jacket in May because it's freezing and it's windy out, unfortunately. Daniel G says, yes, mainly US. 48 says, and I thought our inflation was bad. Yeah, so what is the inflation like in New Zealand, 48? I'd be curious to hear that. I'm not so sure what it's printing at in New Zealand, but 48 says, Tom, fireworks should be banned for the public to buy. Well, I think they are banned in New York. It's funny. I'm not sure if any New Yorkers remember this, but during COVID, every night was relentlessly hammering on the fireworks. I've never seen anything like it. Oh, check out this garbage truck. Does anybody remember that? I remember hearing all night, it was almost like it was a war going on. It was insanity. Every night was just fireworks, like it was the 4th of July, every night. Jimmy T says, Tom, sounds like Chicago weather. Yeah, it's been a little bit colder than usual, but I think next week is going to start to warm up a little bit, I think. 48 is over 6% inflation here, got it. Daniel G says, our salaries are increased every quarter. Wow. It's insane. Lewis says, Tom, what time do you sleep? Was there a video where you wanted to sleep, where you were far away from your home? Not really. So we usually probably go to sleep around midnight, 1 o'clock, right around there. Ron Bo says in Philadelphia. Yeah, so Ron, I'm actually going to be taking the Amtrak to Philly again. I have to go to Philadelphia later this summer. So I went there last month. I had to do a couple meetings, but I was only there for about 48 hours, excuse me. But unfortunately, I didn't get a chance to really walk around the city that much. So hopefully the next time I return, I'll be able to walk around a little bit more. And here we have the Bank of America Tower right here. NMB 045 says, Tom, Argentina needs to tap into their lithium reserves to service their hyperinflation. James Bond says it's cold in Silicon Valley. Wow. That's surprising to hear, actually. So we'll take a little bit of a walk in Bryant Park, but I don't want to forget, so if you type exclamation point tape, TAPE in the chat, the Nightbot is going to drop a link to a really, really good podcast that's going to help you understand just how tech stocks are valued in environments like this where interest rates are going higher. So if you type exclamation point tape, fantastic article there. Not article, podcast. The guest was one of the greatest tech investors of all time, used to operate one of the most successful tech hedge funds in the world. But right now we are looking at the Bryant Park Grill, and you can see the very top of the Empire State Building here. And I'll give you a shot at the Bryant Park lawn. Which I think is going to be open soon. Very, very soon. But to cap off the week, everybody, on Friday the 13th. Ooh, Friday the 13th. Yikes. The University of Michigan releases its Consumer Sentiment Index for May. Economists forecast a 63.1% reading, 2 points less than in April. So the consumer sentiment, the University of Michigan Consumer Sentiment Index is very important. Very, very important economic metric to take a look at when trying to formulate an investing thesis, because obviously the vast majority of the economy is made up of consumer spending. And if consumers aren't spending, if money is not circulating through the economy, it's going to be a bad time on Wall Street. But I'm just trying to find the page where I was reading about the podcast, because I think it's very important. The article in Barron's is titled, "As Tech Stocks Get Crushed, It's Time to Get Back to Basics" by Tae Kim. So if you search that up, "As Tech Stocks Get Crushed, It's Time to Get Back to Basics" by Tae Kim. Really, really well-written article about just how to evaluate tech companies in times of rising inflation, not rising inflation, but rising interest rates, because it'll give you a little bit of insight on why rising interest rates affect, or I'm trying to find another word for effect, but tech valuations, right? And really the only way that I try to explain it on the chat or on the stream is that the vast majority of earnings for high growth, high beta technology stocks are predicated or forecasted in the future. So as interest rates rise, the future value of those earnings are now worth less in today's value because interest rates are higher. So when low interest rates are present, like they were in 2020 when the Federal Reserve slashed the Fed funds rate to zero, it was pretty much all systems go for tech stock valuations. But we are looking at the Salesforce Tower and Bank of America Tower here in Bryant Park. And this is the Bryant Park lawn, which we actually were streaming them rolling out this entire lawn here not too long ago. This is where the Bryant Park Winter Village used to be every year. But now that it is getting towards spring and summer, we have the Bryant Park lawn. Hey, James Tiger says, I hope they let the next recession happen so we can get back to true price discovery and not manipulated valuation like Airbnb, $90 billion market cap with $2 billion in revenue. Yeah, so you're right, James Tiger. You're right. Hold on, I forgot this guy's name. I got to get his name for you guys because I think you guys are going to get a lot of value out of this. But yeah, if you listen to that podcast, it's a fantastic podcast. Exclamation Point Tape is the podcast that really helps understand exactly what James Tiger was saying. Is about sort of managed markets with central banking and the Federal Reserve. As we are looking at the Bank of China here. But let's walk around this way because we'll be able to see a beautiful view of the Empire State Building, which I think somebody in the chat said is all lit up for the United Nations. Is that right? Is it the United Nations or European Union, I believe? I think maybe the European Union. Hey, Con I Am is here. Good to see you. Welcome. Anthony Trips' Wallman Rink is in Central Park. Yeah, Who Dat Dave's is in April. Durable goods declined by 0.9%. Because used cars and trucks fell 3.8%. I also think a lot of people are shifting their spending habits towards more services. L. Allen Designs is here. Good to see you, L. Allen Designs. From Memphis, Tennessee. Very cool. There it is. Dan Benton. There we go. I was trying to find it. You know, it's like you read an entire article. If I don't read an article 2 or 3 times, I forget half the stuff in the article. It's just always how I've been. I need to read it like 20 times. But Dan Benton was one of the most successful tech investors in the hedge fund business of all time. And he did a podcast last month with On the Tape podcast. So if you type exclamation point tape, T-A-P-E, it's going to bring you to a link to the Apple podcast. And if you want to understand tech valuations and how to really evaluate these companies, must listen to that podcast. It's fantastic and you're going to learn a lot. But now we finally have our view of the Empire State Building. Who Dat Dave's shelter costs in April were up 0.5% for April and 5% year over year. Khan says, I am shifting my spending to saving. Love that. Western Mass Dave says, Tom, I don't believe you. You have incredible recall for facts. Yeah, so I think I do, but if I have to like hammer it into my head. So this article I only got a chance to read once because Mother's Day weekend was very hectic, obviously doing a lot of stuff. But here's another view of the Empire. Man, it's looking beautiful tonight. So it says, in a podcast interview last month, Dan Benton, who once ran the world's largest technology hedge fund, argued that the biggest driver for stock prices is positive or negative earnings surprises. So that's very telling because we always talk about that. And that's why I say I always look for companies that not only beat analysts' expectations, but raise their forward guidance. So on Wall Street, you could have something called a beat and a raise quarter. So let's say if you're AMD or Advanced Micro Devices and Wall Street analysts are predicting that you are going to earn $1 a share via EPS and revenue of $1 billion, just as an example. If you then come in at $2 worth of EPS and $2 billion worth of revenue, well, that is called beating analyst expectations. And then lastly, usually after the call or towards the end of the call, before questions, is when the CFO of the company or whoever is leading the call will give guidance or forward guidance. So analysts will also try to predict revenue guidance for the full fiscal year or the next quarter. So it's very important that you look for companies that are not only beating analyst expectations for the current quarter, but are also raising forward guidance as well. So fantastic podcast. I think you guys are going to learn a lot from listening to it as we are here at Bryant Park Fountain. And this is One Vanderbilt. Who Dat Dave says, Tom, corporate profit margins remain near record levels so far this year. That is true. Usually in times of inflation, at first corporate profits will actually increase due to price hikes at those companies. Because if they see their, raw materials going up in price, what they try to do is they try to pass those costs on to consumers like me and you. And oftentimes they're very successful, especially if they are a company with a very, very recognizable brand. People are willing to pay up for those goods and services. So companies with a very recognizable brand would be something like Apple. Hey, Steven is here, says hello everybody from Wyoming. Good to see you. Hope you're doing well on this Mother's Day. FredX is here. Good to see you, FredX. Wow, I think this is an awesome shot here of these two people sitting down looking at the view in front of the fountain. Awesome shot. Cynthia Beal, thank you so much for joining. Much appreciated. David says, you sound like the walking commuter. I get a lot of emails from people saying that. But David, good to see you. Hope you're well. So we'll head towards Penn Station. Cora says, lovely night. Good to see you, Cora. Hey, Brad's brain is here. Good to see you, man. So this is kind of cool. You could actually see the reflection of the Empire State Building in this building. But speaking of interest rates, that 10-year U.S. Treasury yield broke above 3% for the first time in a very, very long time. And that is driving the yield on that 30-year fixed rate mortgage to almost 6%. I think a 30-year fixed is now 5.25%. So that means the average monthly payment of a mortgage is roughly 50% higher than it was this time last year. So I think the biggest question is, do we think that a higher yield on the 30-year fixed rate mortgage is going to tamper some of this crazy demand we've seen in the housing market? And I've seen multiple arguments. And I'd love to know your thoughts in the chat, because many people say that these rising interest rates are not going to do as much as we would like to sort of cool off the demand for single-family homes and cool off a lot of these prices for single-family homes. And I think one of the reasons for that is because there's been a very, very short supply of homes on the market. Now, I think we have to understand what the drivers are for somebody to want to sell their house. And I think that, obviously, since we are now emerging out of a pandemic, nobody really wanted to sell their homes and try to move during a pandemic. I think it's very cumbersome. So I think that's probably one of the reasons. And I think that a lot of people who just purchased homes that have locked in their mortgages at very low interest rates, some of which under 3%, they're not incentivized to sell and move because their monthly payments are so low and they could afford them. So I'm not so sure if we are going to see a massive correction in housing. I'd like to see a correction in housing to allow some people or first-time buyers into the market. But I'm not so sure, because we're actually seeing a record level of all-cash buyers. And if you buy your home with all cash, well, then you don't have a mortgage. So I don't think rates are going to be that big of a factor in your decision-making, unfortunately. Parking full-time says the yield on the 10-year looks like it's going parabolic to me right now, hoping this is not sustainable. Yeah, so the velocity at which that yield is going up is concerning, because that means people are dumping U.S. Treasuries. And as we always say, we don't want to see a huge, massive sell-off in the debt market, because a huge, massive sell-off in the debt market probably means that we're going to see a huge, massive sell-off in the stock market. So Tom Cruise is back in action. I did not know that. So only in theaters May 27th. Interesting. Isn't Top Gun already a movie that's out, though? I could have sworn that Top Gun is already a movie that came out. And so right next to our pal Tom Cruise, we have the ball that they drop on New Year's in Times Square. Gregory says Top Gun was from the 80s. David says 3 houses on my sister's have been bought and sold in the last 16 months. Wow. David, that's incredible. So David, how were they bought and sold? Was that like a crazy bidding war type deal? Did they sell for over asking? Or sort of what have you been seeing with that? Hey, Who Dat Dave says building permits gained 0.4% to 1.873 million unit annual rate, which is close to the best level since May 2006. But new home sales fell 8.6% in April, attributed to rising mortgage rates. Iris Luce's rent is going higher than before everybody is buying a house. Well, I think one of the reasons why you're seeing rents going parabolic here, because some landlords that I know, I don't know many, but one of which that I do know that owns a building here, he actually has many units in his building here in New York vacant. So many of his units are vacant, but he is actually raising the rents on all of those units and increasing the standards or the credit quality of the applicants. So here's what I mean by that. He is not budging. He's saying, look, if you don't make 40 times the rent, I'm not renting to you. If you're a couple and you don't make 80 times, I'm not renting. And he's like, if you don't have at least an 800 credit score, I'm not renting to you. So he would rather sit vacant and have crazy vacancy on his units if he can just get extremely, extremely well-qualified tenants. Because what happened during the pandemic with all of these eviction moratoriums, unfortunately, is a lot of people weren't paying their rent and they couldn't evict. So they don't want anything like that to happen ever again. So what you have to do is you have to raise standards so egregiously high to where it's almost like an impossibility, or it's probably very, very low for somebody to not pay their rent, because these landlords have been burned so much. And obviously this is a piece of anecdotal data, right? It's only talking to one landlord. But, you know, during the pandemic on the streams, we were talking about this a lot. And one of the things that we said was a lot of these eviction moratoriums are going to leave a bad taste in a lot of these landlords' mouths, because a lot of this, it was just a big disaster. I mean, a lot of the rental assistance was never distributed properly, obviously, because we left that up to the government to do. So a lot of these landlords are getting stiffed, and some of them are still getting stiffed. So unfortunately, I don't think there's going to be any wiggle room for rents. Travelnista says, Tom, if people bloated on rent is because those shitty landlords deserved it. Interesting take. I'm not sure I agree with it, but I respect that opinion, and I respect that comment. John says, wow, the NASDAQ. Yeah, the NASDAQ is right here. MF Craig says, Top Gun release date. Oh, so it's a different one? David says, Tom, I'm in Dallas, and they were all three bought by foreign investors, refurbished and sold. The demand was that high. Wow. So they were flips. Interesting. Line Sink says, wasn't Tom Cruise supposed to be for real going to the ISS to film? I'm not sure about anything about movies, but yeah, for some reason I know that Top Gun is, or it seemed to be like an old movie. Maybe they're just re-putting it out in theaters. I don't know. Daniel Fernandez is here. Says, hello, good to see you, Daniel. Welcome. Ron Bowe says, non-financial question, Tom, what's your favorite drink? I suspect scotch or non-drinker. So I'm a non-drinker. I don't drink alcohol. But that's not to say that drinking is bad. This doesn't sit well with me, personally. Yeah, I just don't really have an interest in alcohol. But, you know, at events I'll drink like ginger beer. I mean, obviously it's non-alcoholic, but it's actually pretty good. Ginger beer is actually really good. Bit of Wander, what's up, man? Happy Mother's Day to you, and happy Mother's Day to everybody in the chat. Mr. Ming says, I like vodka coolers. Bit of Wander says, no alcohol for me either, Tom. Billy, good to see you, my friend. Miker says, you still can't evict in California. My neighbors haven't paid rent in 2.5 years. Oh my God. Yeah, I mean, you know, we're seeing a lot of that stuff on Long Island, a lot of that stuff here. Yeah, I mean, it's definitely not a good situation at all. WW, thank you, I appreciate that. So here we are in Times Square, but we are going to now turn around and go to 34th Street, Pennsylvania Station. Phil says, I've seen a shift from drinking to wine and spirit collection. You know, one of the things, not going to lie, I think we were talking about this on another stream, I actually think I want to get into wine collecting. So I don't drink alcohol, but I don't know, there's something interesting about the history of making wine and collecting it. So I've actually been binging, you know, obviously we all go down the YouTube rabbit hole. I think a lot of you have probably found this stream from going down the YouTube rabbit hole. But I've been watching a lot of these YouTube videos where they visit some of the most expensive wine collections in the world, and they interview the owners of these unbelievable wine collections. And it's so fascinating. So I think I want to get into that later. Hey, Disney cast member, what's up? Says you need to come to the Finger Lakes area of New York to start collecting wine. So Disney cast member is a fellow Long Islander, and you make a good point. So the Finger Lakes includes like Skinny Atlas Lake, Cayuga Lake, and it's very, very famous for wineries right around the Finger Lakes region. So you're 100% right. I would love to go visit. Western Mass Davis, like Tom, I go down the YouTube rabbit hole regularly. I know. Well, supposedly there's some fine art or very expensive and extravagant artwork that actually outperforms the S&P 500. So I think as I get older, I probably want to diversify, just aside from equities and Bitcoin and other cryptocurrencies. I want to cross the street, but I think there's a dead zone over there, so we'll walk this way. But diversify maybe to art, collecting art, things like that. Carly says, hey Tom, what is your favorite store in New York? Favorite store? Maybe Italy? I think Italy is a little bit overrated, but I don't really go to many stores. But if I had to say one store, probably Italy. It's a good time. It's a fun time. And that's near 22nd Street, Italy. Daniel says, Tom, are you having fun in downtown Toronto? Having a blast? Khan says, I have property in the middle of the Finger Lakes. Very nice. So I think there's 5 Finger Lakes, I believe. I think 5. Who Dat Dave says, is Italy near the Flatiron? It is. It's actually right across the street from the Flatiron building. Carly says, is New York always this busy? Well, I think this is a little bit of perhaps a disingenuous view of New York. This is Times Square, so this is where the majority of the tourist activity happens. But if you go to Park Avenue, other parts of Midtown, it's usually pretty dead at this time of night, especially for a Sunday. But you could actually see the One Vanderbilt building from here. It's the one with the white spire on top. Yeah, so Who Dat Dave, you're actually right. So I think the chef is called Mario Batali, and he has some serious allegations against him. But yeah, it's unfortunate, but it's true. And I think, I never knew this, but I think he actually owned a stake in Beko, surprisingly. But I mean, I guess he no longer has any equity stake in the companies. But yeah, it was a lot of no good stuff. Somebody says, hello from Busan, Korea. Welcome. Annyeonghaseyo. Hope you're doing well. Tom M says, Dow futures slumped nearly 400 points on Sunday. Yeah, so Tom M, I think right before we started streaming about 2 hours ago, crazy how 2 hours flies by, the S&P or the E-minis was also down about over 1%. And the NASDAQ 100 futures, NQs, was also down over 1% too. So it seems like we're down across the board. So maybe we'll be in for a Black Monday. Who knows? I think the number one thing about this market, or that the market needs, is liquidity. And, you know, we can have a little bit of a freeze up here now that we don't have the Federal Reserve providing liquidity. But I believe the date is June 1st. So Fed Chair Jerome Powell last week on Wednesday, he came out and said, yes, we are approving a 50 basis point rate hike. But if we looked at the futures markets, the markets already knew, pretty much 99% certain that the Federal Reserve was going to raise rates. So we did get that 50 basis point rate hike. He did then provide further clarity and said, look, no way, shape, or form will we ever be having a 75 basis point rate hike. But then, to cap off the night, he said that starting June 1st, is when they will be unwinding the massive balance sheet that is now multi-trillions of dollars, which consists of mortgage-backed securities and U.S. Treasuries. So June 1st, a lot of that stuff is going to be rolling off the balance sheet. Hey, Irevis is here. Happy Mother's Day. Says, hello, Tom. How are you tonight? This stream looks crisp, clear. Irevis, appreciate that. Hope you're having a good Mother's Day and a Mother's Day weekend. Here from Busan, Korea. Welcome, everybody. David Randall says, did you know Warren Buffett learned a lot about investing studying horse racing odds? Well, I think Ben Graham, hold on one second. But no, I didn't know that, but thank you for letting me know. Sorry, somebody was behind me. Tom M says, we need businessmen back in charge of this country. Bit of wander, always good to see you. So this is Joe's Pizza. Joe's is all right. Very famous sort of tourist spot, but it's all right. It's not like the best pizza spot. I think there's a spot on the Upper West Side that may be a little bit better. Well, I know it's a little bit better. Made in New York. Pizza, great spot. You know, it's funny, they're actually in litigation with Prince Street Pizza, believe it or not. Hey, Michael Wells Jr. is here. Says, hey, Tom, what's up, Michael? Always a pleasure. Hope you're well. WW says, DeFara Pizza is the best. You're right. So I think DeFara, unfortunately, the guy passed away. I think not too long ago. But yeah, DeFara Pizza is in Brooklyn, New York. Probably one of the best slices I've ever had in my life. Not gonna lie. Aaron says, what are the best neighborhoods to live in New York? So talking about Manhattan, I would say the Upper West Side. For me, anywhere between 68th Street and 86th. That's my personal favorite sort of location. Mainly because you have the Museum of Natural History up there. You have a lot of good restaurants very close to Central Park and also Riverside. So a lot of times when people come to New York, they only go to Central Park. But I think Riverside is a very underrated park. And if you live on the Upper West Side, you'll be able to enjoy both of them. Larch says Ozone Park. Yeah, so my grandmother's from Ozone Park, Queens, near John Adams High School. Snoopy says Brew and Beyond, Long Island, commerce business. Carly says, bye, Tom. Have a good one. Thank you so much. Tony Lagus is here. Tony says, hey, Tom. How are you, mate? Happy Mother's Day and enjoy the evening from Sydney, Australia. Thank you, Tony. Good to see you. Disney cast member says Prospect Park. So I used to coach soccer in Prospect Park when I was a teenager in Brooklyn. Prospect Park is nice as well. Hey, Marcelo is here. Says, hey, Tom, hope you are well. Expecting you've had a nice Mother's Day despite the Sunday evening. Yeah, had a fantastic Mother's Day weekend. It was a blast, and I hope you guys all had a great one as well. Phil says, what is your opinion on the accuracy of Barstool Pizza review? So if you guys want to hear a hilarious review, the funniest one was Joe and Pat's. So during the pandemic, I used to watch those because, I was sitting at my desk working and I needed something to entertain. But that is the best, or I would say the most entertaining review. So if you want a good laugh, if you search into YouTube, Joe and Pat's Pizza Review, it's hilarious. But the accuracy of the reviews, I'd say they're pretty accurate. I'd say they're actually pretty accurate, yeah. Greetings from Hampton Bays, Long Island. Very cool. I used to spend a lot of time in Watermill, New York, which is out there. WW says, Walks on Wall Street. Tom, you mentioned that video a few months ago and I watched it. Hilarious, so many random things happening. Yeah, that was absolutely hilarious pizza review. Hey, Photos from around New York is here. What's up? Good to see you, Photos. Welcome. Ryan says, I just showed someone that review today, Tom. So much happened in that review. It was hilarious. It was ridiculous. It was crazy. And not for nothing, Joe and Pat's is actually a very good pizza spot. It's actually really good pizza over there. I'm trying to figure out what other reviews I thought were funny. For the love of God, says Tom, I bought a frozen pizza by Barstool at Walmart, 6.48. Yeah, I'm not a big fan of frozen pizzas. I don't really ever eat frozen pizzas, but I did hear that they came out with the frozen pizza brand. Hey, Dr. Longest says, greetings from North Carolina. Good to see you. Hope you're doing well. Monica B says, hi, watching from LA. Good to see New York. I am new here. Well, thank you for joining. Monica B. So we usually live stream 5 days a week between New York City and Miami, talk about finance. But today we're doing a markets look ahead. Busy week on Wall Street. We have Tyson Foods reporting tomorrow. A lot of the oil and gas stocks are reporting too. But obviously the most anticipated day is going to be Wednesday, is when we get that CPI inflation number. And we'll see if inflation is peaking as we have this Tesla taxi driving by. But thank you for being here. David says Aldi has good pizza. I didn't know Aldi has pizza. So that's a good point. So let's talk about that a little bit. So stores like Aldi, Dollar General has performed really well. And I think it's because I would say ever since 2008, we've essentially seen this massive expansion in the wealth gap or wealth divide in the country, where we are building a society of extreme haves and extreme have-nots. And I think that's all thanks to the Federal Reserve, because as you keep interest rates artificially low, and as you buy mortgage-backed securities and U.S. Treasuries, putting a bid under the market, that not only creates inflation in the form of traditional CPI numbers, right? But it creates the inflation of asset prices. So it inflates the price of equities, U.S. equities. It inflates the price of real estate, right? And so why would that sort of create or help create a wealth divide in the country? Well, if we look at the data, who are the people in the country that own the majority of stocks or U.S. equities and own the majority of real estate? Well, it's the top 10 to 5% of Americans, right? The average guy, if we look at the statistics, the average guy and girl does not have that much exposure to the equity market, or they don't own much real estate. It's all big institutional investors, large corporations, and ultra high net worth individuals who own the vast majority of the real estate that their prices are getting inflated, own the vast majority of equities, which we've had a huge tear in the stock market since the lows of 2008. So all of that extra liquidity in the market and all of that money printing and the artificially low interest rates are fueling that wealth divide. So you've seen companies' earnings who appeal towards value, right? So if you go to the Dollar General, it's not like Whole Foods where you're going to spend a whole paycheck at Whole Foods. It's very affordable products and services. So you've seen a lot of those companies do exceptionally well. Dollar General I think actually just is coming off the back of a beat and raise quarter. So not only beating on their top and the bottom line, but also forecasting additional guidance that is higher than Wall Street's expectations. So stores like that, Dollar General, even Walmart and Target have been performing really well. So it's interesting that you mentioned that. I think a lot of money to be made going forward will be investing into companies that appeal towards value, getting a deal, things like that. Five Below is another company. I'm not too sure how they're trading though, Five Below. But this is a beautiful shot of the Empire State Building. I think the Empire State Building is lit up for the European Union. Is that correct? Hey, David Randall says, I was just going to mention Target. Yeah. Canyon Pacific says, good evening, Tom. Happy Mother's Day to your mom. Thank you so much. I appreciate that. All right, so now we are outside of Macy's, 35th Street, Herald Square. Michael Welch Jr. says Bed Bath & Beyond is doing poorly. Yeah, I think one of the reasons why Bed Bath & Beyond is doing poorly is because they've been one of those companies that have been cannibalized by the Amazon effect, right? So if your company doesn't have a good go-to-market strategy for e-commerce, you're probably not going to do too well. Probably not going to do too well. Dr. Longus says, how much will they raise interest rates? Well, the Federal Reserve just announced a 50 basis point rate hike. But we are at the top of the hour. So if you guys want to stay connected with the channel, and if you like talking more about finance, if you want to read my equity research every single week on Tuesday, if you scan the QR code on your screen, it'll bring you to a landing page. You could punch in your email to sign up for the Behind the Street newsletter, which is a weekly financial newsletter where I cover not only the U.S. equities markets, but emerging markets, fixed income, and cryptocurrencies. So if you want to scan the QR code and sign up for free, I'll send you an investing newsletter every Tuesday after the market closes. If you want to know more about my thoughts on the market, in addition to the live streams, but you know what? I'm actually going to walk over here because right from the Macy's sign here, you're going to be able to see probably, arguably top 5 views of the Empire State Building. So check out how unique this view of the Empire looks with the Macy's sign in the shot with the Empire. I think it's one of my favorite views. Marcelo Gill says, Tom, your opinion please when U.S. will stop to fabricate dollars not pegged to gold? Probably never. We'll probably never go back on the gold standard ever. And not only can you see the Empire from here, you could see One Vanderbilt. Fantastic. Frankie's like, look what it looks like as if Macy's is sponsoring the video. Stephen James says, Tom, did Elon Musk buy YouTube? No, Elon Musk bought Twitter, which I think is actually a good purchase for Elon Musk. I think And it's not just, if anybody else, literally if any other billionaire or big investment manager bought Twitter, I'd be happy. Because they have done a horrible job at monetizing that platform. Twitter has done probably one of the worst jobs ever at creating value for shareholders. So I think it's about time for new management to come in. It doesn't matter if it's Elon Musk or not. And the reason why I say that is because a lot of people are making this political somehow, saying that, a big evil billionaire shouldn't be able to buy a company like this. But then again, almost every billionaire owns a major media outlet, right? If you think about it. Jeff Bezos owns the Washington Post. Mark Benioff, which is the CEO of Salesforce and the founder of Salesforce, he owns Time magazine. So it's not like it's abnormal. It's not like it's abnormal. But I would even be happy if Thoma Bravo took Twitter private, right? Thoma Bravo is one of the most successful private equity firms out there that only specializes in enterprise software and tech. So I think it's great. I think the platform is going to hopefully we'll do a little bit better with monetization. But if you guys want to follow me on Twitter, I post a lot of my thoughts on there. It's a good way for us to connect. You could follow @WalksWallStreet on Twitter. And in the distance here, I'll try to zoom in. You guys could actually see the One World Trade Center. You can see the very top of the spire. Hey, amazing air show videos. Elon Musk used to be loved by Democrats as he brought us EVs, as well as solar. They turned on him when he became very successful. Interesting. Yeah, I think Elon Musk has done more for climate change than anybody on this planet, right? If we think about all of the traditional vehicles out there, it's a good possibility that within the next 20 years, almost every car on the road could be an EV. Tom, is Manhattan Mall still a mall? I haven't been in that thing since, wow. I don't even remember. It's right here, though, the Manhattan Mall. I think it's closed now. Maybe we'll have to stream there during the day one time. But I'm not even sure what's in there. I think there's a Starbucks in there, I think. Andy S. says they should make trucks EV. They are so loud. Well, I think they're working on that. I think Rivian is working on that. And Rivian is one of the EV companies that Ford and Amazon are heavily invested in. They actually took a huge bath on that investment so far. So in Amazon's most recent earnings report, they lost a ton of money on their investment in Rivian. And I think now that the lockup is done, supposedly Goldman Sachs is processing a huge block order, a sell order for Ford to dump a lot of that. Hey, Murky is here. What's up? Long time no see. Says Tom, gas stations will be replaced by electric stations. It's possible. Sherry Rodrigo is here. Welcome, Sherry. Good to see you. Amazing air show videos. Says Tom, Ford is selling some of their Rivian. Stay. David Faber tweeted about it yesterday. That is true. Sophia Griffiths says Happy Mother's Day. Happy Mother's Day to you too. Hope you're doing well. So we'll take one lap around Koreatown, but the bad news is my phone is on 10% battery. So we're going to have to end the stream relatively soon. Carson says Tom, Jpmorgan also has a huge sell for 13 million shares. Amazon probably. Yeah, well, I think this is because the lockup period is expiring, right? So a lot of the times after lockup, you'll see a lot of the founders cash out. But a lot of people were buying that stock. And, they have very little revenue, no earnings. Will it probably be successful in the future? Yeah, but I think I'll wait for the company to be profitable first. before buying it. I mean, at this point, there's really no point in buying it, especially given the interest rate environment we have. But that's just one of my rules. But yeah, you're probably right, Carson, 100%. But Disney cast member, happy Mother's Day to you. I hope you had a great weekend. It's Princess's. Why do you make New York look so good? It's dangerous out here. Well, I mean, we don't really venture into the subway as much, so I think that's why it looks good. But I appreciate it. Wow, Checkers X is Tom. 1 out of every 4 charging stations in San Francisco don't work. California is not ready for primetime EV. So that is very surprising to me, actually. I did not know that. Is that true? Could you drop a link to that? Because that's very concerning, because California is really leading the way in EVs. Somebody says, I wouldn't buy Amazon right now with the interest rates going up. So it's very interesting. I think the biggest value prop I see in Amazon, which you guys are probably already gonna say before I say it, because I say it almost every time on the stream. The money maker is not the e-commerce business. The money maker is the cloud business, not the e-commerce business. The e-commerce business is a big money loser. Well, I shouldn't say that. In comparison to the cloud business. So Amazon AWS is where it's at. And that's why every time that Amazon reports earnings, every time that Microsoft as well as Google or Alphabet reports earnings, the main thing I look for is the cloud revenue growth and profitability. So Google Cloud is not yet profitable, but it will be profitable within the next couple of years. Microsoft Azure Cloud, extremely good business, growing their revenues extremely fast. And then you have AWS, which is Amazon Web Services. And I think if you're in college or something like that and you're looking to get into tech or a very high-paying career, I would apply to all of the account executive positions at Amazon AWS, Microsoft Azure, and Google Cloud. Because not only are you going to get a big base salary, you're probably going to get a lot of stock options and equity, as well as the commissions. The potential to make a ton of money in commissions is there, right? Because you have demand for a product. So anytime, that's why all the time I say, it's not just you don't want to look for companies that are posting good earnings and good sales, good return on equity, high profit margins from an investment standpoint. You also want to take that into consideration from a potential career standpoint. Because if you want to break into enterprise software sales or enterprise tech sales, you want to make sure you're selling a product that's in demand. But here's one last view of the Empire State Building, and then we will have to end the stream, unfortunately, my friends. But if you want to connect with us on Twitter, you could follow at Walks Wall Street. If you want to join our free financial newsletter, if you type !news, NEWS in the chat, you can click the link that the Nightbot will drop and sign up for free. I think I'm going to start to write a little bit more about how to break into careers in tech, if you want to be an account executive, enterprise account executive. Also, I may have a couple of my friends who work on Wall Street at Goldman Sachs, Morgan Stanley, write some newsletters as well about how to break into a career on Wall Street as an investment banking analyst or the like. So feel free to connect with us there. And more importantly, guys, if you enjoyed tonight's stream, feel free to leave a like on the video, subscribe if you are new, and even more importantly to that, have a fantastic rest of your Mother's Day. To all the mothers out there, thank you. Much appreciated. To all of our moderators, thank you very much. And I hope everybody has a phenomenal start to the week on Monday. A crazy week, but we'll be here to break it down on the stream. So Disney cast member, thank you. Happy Mother's Day. Paul Medis, Samantha R. says get home safely. Thank you. John, Canyon Pacific, Ibrahim Azam, FredX, John, Checkers X, Anna, Water Blazing, thank you. DWG, thank you so much. Appreciate it. Kira J. Otto, thank you so much. Michael, we should be live tomorrow, absolutely. Whodad Dave, appreciate it. David, everybody that's new, thank you. Western Mass Dave, British Gray, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. And I'll see everybody right back here in New York, 8:30 Eastern Standard Time tomorrow.